Hi, folks. Lee Gettess here with the Market Sense for the week of September 13th, 2016. The charts we use in this presentation are provided courtesy of Genesis and the Trade Navigator software. And looking at the bond market here, boy, there's a lot of weeks on the side and then a big breakdown, and this was actually really just Friday. I mean, that's pretty much one day that took out all of those weeks' lows. Uh, that looks kind of serious. It looks like they might actually believe the Fed's ready to raise rates now. The for this week, a little follow through was certainly understandable. They seem to have stopped around the 165 area, which is sort of the projection that we had, and we kind of looked at the best resistance as being right here around the 168 area. They haven't been there yet, so we're kind of thinking they still might, but I have to say they opened lower and rallied up strongly first. They just didn't make it to 68 before going down here to the support, and they've been a little bit through it. If they don't go back up to that resistance, and again, I still think that's what the probabilities favor, but if they don't, boy, they could get really slammed here. They could go down to the 162 area back in this old sideways pattern back here in the middle of the chart. They could be down in that area fairly easily. And again, I think they really believe the Fed might raise rates now. And of course, we have a Fed meeting coming up in just a week or so that'll be fun to watch. Stocks had sort of a similar reaction, taper tantrum, whatever you want to call it. They had a huge breakdown all pretty much in one day. But it looks really nasty even on the weekly chart because it took out so many weekly lows. Now they've done something rather interesting here. After this, we sort of expected follow through, which we got, and then they rallied up really, really strongly. But they rallied exactly to that middle moving average, and that's 2156 to the tick. That's the high of the week so far. Could they now go back down here to the 2090 area? Boy, I think that's a real possibility. And it even makes sense because it's kind of back here among these swing highs that they broke out from. Yeah, they could go down there again. This holding this resistance to the tick is a little upsetting. Now, we've got PPI and CPI coming out for the rest of the week, and maybe there's something that makes a Fed move less likely, and could send them up to the 2180 area up here again. I mean, that's possible. But right now, it certainly seems like developments in the world have made a raise in interest rates a little more likely than it was a week ago, and according to these markets, a lot more likely. So that means we could see lower prices here because, let's face it, all of this rally is pretty much just based on central banks popping them up. There's not a lot of other reasons for it. So that's what we've got for you today. I hope you can find something profitable to get yourself into.